Another takeaway here, which I think is one of the key takeaways, is to build your balance sheet. I view the balance sheet as the platform from which the income statement has the potential to be the best it can be. If you have a lot of debt, you're going to have a lot of interest expense. It's going to weigh heavily on your income statement. If you don't have a lot of cash, you can't take advantage of the purchasing power. There's a lot of it out there if you've got the cash. If your receivable turnover is a lot slower than it should be, then you're carrying those receivables. You have to borrow money to fund your operations because you're not getting paid. So the balance sheet is an area that you really should focus on to make sure that it's as strong as possible. Look at your ratios. CFMA Financial Survey's got some tremendous ratios. They've got benchmarking, quartiling. Look at those and know exactly where your company is in relation to those ratios. Pay particular attention to liquidity. Make sure that you're maintaining the highest liquidity you possibly can. How many, just show of hands, how many CFOs and controllers in the room? Just about everybody. You folks can play a real key role in pointing out these balance sheet pointers to the owners of your company. My experience is the owners don't have a lot of financial background, but they rely on you guys very, very heavily. Distributions. Really try to get the owners not to take distributions in excess of tax payments. That has happened in the past. If you can have them keep the money in the company, strengthen the balance sheet, strengthen the equity. And if they have taken money out, see if they can put money back in, put more capital back into the company. So balance sheet management, very, very key in my opinion. On the income statement side, the name of the game with profit dollars, gross profit dollars, gross profit margins falling is manage your overhead. That shouldn't come as any surprise to all of you financial oriented here, but the strong companies are the ones that can dial up, dial down their overhead to match their gross profit. If you can't do that because you've got fixed costs, you're going to be in a much more difficult position. Out there on the jobs, another opportunity, dial into job efficiencies. Hire an efficiency experts, because as profit margins come down, the dollars of profits that are in there in the bid are not as much. It may make or break a job by how efficient the job is managed. So really dial into job efficiencies out there in the field. Communicate constantly. Those within your organization, project managers, owners, financial folks. Communicate outside your company with owners. Know where the owners are in terms of paying you. Relay that information to your banks. Relay it to your creditors and sureties. And maintain that wide open communication piece. And I think if you do all of those things, the name of the game there is to outlast your competition. Because there's a lot of new folks in the market now. They aren't going to be here in a year or two because they're taking jobs way, way too cheaply. So if you can position your company to outlast them, at the end of the day, you're going to win the game. So hopefully you have some takeaways on what you can focus on. But the balance sheet, income statement, obviously, are the two keys over the next probably